You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always, and welcome to our first suburb spotlight of the year. It can't be any other suburb than Armadale. As I said last week, it was the number one performer over the last 5 years in Western Australia. Who would have thought a suburb not in the Pilbara could increase in value by 120% over the space of half a decade? There's a number of reasons of how and why it's happened. There's only one man in Western Australia who can answer those questions for us with a level of brevity and expertise, and that is Ash Swartz from O'Neill Real Estate. Ash, thanks so much for coming in, mate.
G'day, Trent, and thanks for having me. It's a real pleasure to be here.
We've had Mark Grogan on a couple of times talking about Kelmscott, and a lot of people have loved those episodes because he's got a really good subject knowledge of the area. And some would say that the story of Armadale isn't too dissimilar to that of Kelmscott. It has grown in a similar way, but Armadale's pipped it. It's pipped Camillo, Maddington, Gosnells, and a number of suburbs in the LGA. The first question I have to ask is, and it's a tongue-in-cheek question, Ash, what makes Armadale a better suburb than Kelmscott?
Trent, when the market was going down, it was often my sellers that would complain that we were pushing prices down as agents. So if that's true, if the market's going up, then I can take full credit. And Mark's obviously not pushing as hard as us.
Oh, I love that. I love the competitive nature, especially given you're both in the same agency. But it just shows you must have a great team there because you're all doing very well in terms of volume. But also, as you said, it's great to be along that journey. And a lot of agents can, for a big part of it, I think the same thing of Siobhan McHale and Willoughby, can pat themselves on the back for being quite influential in the growth story of their suburb, especially when they have such a high percentage of the amount of sales in the suburb under control at any one point in time. It's a suburb of 13,000 people. It's a historical suburb, isn't it, Armadale? It's got a lot of heritage in it. Some would say it's one of the lowest socio-demographic suburbs in Perth. It's one that's had its challenges in that space too. And it might be the reason why 5 years ago it was one of the cheapest suburbs in Perth. Generally, I'd love to flesh out with you that story over the last 5 years as to where things were on the turn of COVID and how and why things have progressed from a price of $265,000 5 years ago just after COVID to what is now in the mid to high 500s, depending which data source you ask. What was life like being a selling agent focusing on Armadale pre-COVID?
The Armadale market pre-COVID was a slow market. Now, for anyone that was in the area at the time, we knew that the market started upticking prior to COVID actually hitting. But the Armadale market was particularly slow. Prices were low. Affordability was there. People could buy in the suburb that they wished to buy in. And there was better suburbs than Armadale that they could choose to do that. Armadale does have a reputation for being a lower socioeconomic suburb. I would like to think that we've seen changes in that, positive steps forward. There's a lot more infrastructure there now. I've been selling in Armadale for 10 years and there has been a lot of growth, not just in value, but in the people coming to and the money that's come into the suburb from investors, but also from councils and federal funding as well as helped on certain projects.
It's interesting to note that $265,000, you couldn't even get a granny flat with no land for that these days. You could be getting 4-bedroom homes pre-COVID for that price in Armadale, couldn't you? It's crazy to think, isn't it?
5 years ago, when the market was slower, I remember distinctly selling a house on Cabarita Road in Armadale. And Cabarita Road, for anyone that knows it, there's a lot of state housing on there. This was ex-state housing. 3x1, 700 square metres. House was to the side, easy to do, retain and build, which is still a popular real estate nowadays. It was on for $200,000, and I spent 3 months of my life opening up the doors, ready and willing to take buyers through, and typically most weeks no one would show up.
Was there anything wrong with the house?
Nothing wrong with the house. It was move-in ready. It wasn't an amazing house, but it was your typical house. Move-in ready, and yet no one coming through. We ended up selling it to a local investor that bought it and picked it up for $180,000. If only we could go back and pick up a few of those properties ourselves now, Trent.
Let's have a look at what's it worth now. Has it resold? Has he done anything to it? What would RP Data say?
That same property, if you were to put that on the market now with no improvements, not doing anything there, if you just put a tenant in there and everything at the house was working, but no renovations at all, you'd be looking at offers in the low 700s, 720, 730.
Jeez. It's so awkward to even reference that. We've done retrospectives on Suburb Spotlights for the last year or so with number one agents like yourself, but not to that level. Not where you're talking about more than tripling in value of a property with no improvements. So what we know is the landscape is changing financially. Back when there was 17,000 properties on the market, which was a house for every 150 people, it was the suburbs like Armadale that suffered the most. They had the least attention. Wind forward 5 years and there's a house for every 1,500 people, so a 10x reduction in supply versus demand. And it's every suburb that's benefiting from the demand factor. People who otherwise would have been buying in Canning Vale now looking at places like Gosnells, and whoever would have bought in Gosnells are looking at places like Armadale and Camillo. But with the price point shifting so much, you've referenced improvement in socioeconomics. What does it look like on the ground to have a shifting in values? Obviously, everyone who lived there and has a house there, their properties have more equity in there. That gives a bit of a feel-good factor. But how are the kids going trying to afford a home in 2026 down the road from their parents?
Yeah, Trent, it's a really good question. And it almost makes me think of a few podcasts ago when you were talking to Rash about the theme for this year. And you were talking about the last few themes were affordability, you had accessibility and amenity. And I'd almost say that this year is probably the year of anxiety, to keep with the theme of starting with an A.
Oh, I love it.
Anxiety because parents are worried about what's going to happen with their children. And if I think about your typical family that own one house, they don't have an investment property, depending on the price point of the property, it's likely that they've created somewhere between $300,000 and $500,000 worth of equity in the last 5 years. And that's all well and great. But they're looking at their kids having to pay getting close to $800,000 for their first home. That's a lot of red. It doesn't matter how you look at it, it's a lot of red. And for the average person outside of real estate that doesn't have their finger on the pulse, they see that and they don't see a way forward. And that's an anxiety.
Anxiety is a fantastic choice. It's certainly the outcome for most people right now. And whether you've got well-off parents or not, when you're young, when you start in your career, you're probably not making six figures. And to buy a house in the 800s, you need six figures just to meet the debt-to-income ratios, let alone the deposit that you need. And it's a good yardstick to have a look at a suburb like Armadale, which historically has supposed to have been the most affordable suburb in Perth, and get an understanding for who your buyers are. Because if it's not the kids, who is it? Is it simply investors that have pumped these prices up? Is it people recycling their money through the suburb as second homes? What's that journey been like, and how has that composition changed from pre-COVID in terms of that pie graph nearly of who's buying to now in early 2026?
I think mapping buys is a great way to see what the market's doing. And if we look at pre-COVID, certainly if we backtrack 10 years to when I started real estate, 2015, I think one of the big changes that not many people talk about is where the investors were coming from. We were dealing with local investors. We would deal with the odd Eastern States investors, but they would normally fly in, see a couple of properties and maybe make a purchase. And once we got to the COVID time 5 years ago, we still saw investors. Investors had somewhat left the market. It wasn't a good time to invest prior to that. The market was dropping.
People had negative equity, so investment wasn't really even a priority at that point, or an option.
Certainly for our local investors. Since then, we've gone to the era of buying properties sight unseen and being able to have a national market rather than just have a WA market.
Do you think Facebook and all the social media side has really opened the floodgates on that compared to 10 years ago, when it was really hard actually to see a property unless you flew over?
100%, as well as good podcasts. We're in the era of buyer's agents, giving confidence to people. And I think the era of the tech that's come out in the last 5 years has given confidence to be able to purchase when you're thousands of kilometres away.
It started to create a more integrated national market, whereas I'd say, 10 years ago, 2016, things like Teams and FaceTime, they were really in their infancy. Not many people were using them. The quality of the video wasn't great in the first place. And so you're right, it's hard to have that confidence. And certainly buyers agents in the East Coast were not interested at that time in Perth. They were pushing hard into Queensland and Melbourne and Sydney, where it's easier, to be frank, for them to do their job. It's closer to home. And they've really only moved to Perth out of necessity when things got too expensive in their backyard. And I've explained it a few times like a locust swarm, like a great migration of wildebeest. They come and pillage and leave again at some point. And the irony of it is they haven't really left at Perth yet. They're still eating. They're not as prevalent as a percentage of buyers as they were maybe 3 or 4 years ago. But the fact that we're still seeing growth shows that strength in the market, and it is more resilient than simply the impact of that locust swarm. But it certainly did make an impact, didn't it? They were the first movers, weren't they? The East Coast investors back in 2020, 21, 22. It felt like the Perth buying scene was still getting out of first gear, mentally but also financially. And the guys from Sydney and Melbourne were cashed up with massive equity, massive overconfidence. We're just buying everything they can get their hands on, weren't they?
Overconfidence was key. They were certainly more confident than I was in the market, and they came over in droves. And they had seen it happen in Sydney and Melbourne, where house prices doubled. You could hear it in their voices on the phone. They were confident that a $200,000 house would be $400,000, and when it hit $400,000, they were confident it was going to get to $800,000.
You weren't hearing that from the locals, were you? They were saying, you're on for $200,000, I'll give you $190,000. Whereas the East Coaster goes, here's $220,000, can I have 3 of them?
I remember a first home buyer coming through a house that I had on the market, and his dad said, nah, Ash, this house is overpriced. We'll probably hold off for 6 months, and 6 months when it's all cooled down again. That same house, that $300,000 house, and they didn't buy it, by the way. His young son actually went into a rental and missed the market because that same house now is $700,000.
And they just never caught up again.
Never caught up again. Yeah.
And now just being held back by not being able to rationalise the losses you've made over the last few years comparative to the market in real terms. So could you give me a percentage of what that pie graph looked like pre-COVID?
Yeah, for sure. We can do that. I think post-COVID, as that market changed and we got the buyers agents starting calling us and the Eastern States investors, they were making up close to 60% of the offers on our properties.
Okay. And the rest were local home buyers, not really any investors?
Home buyers and first home buyers. It was a real rare day to see a local investor, mainly because they just didn't have the equity in their own house.
And what is it now?
We actually tracked the last 60 offers that we've had come through on properties in Armadale, and this is for properties under $850,000. And 45% of those were from local investors and 28% from first home buyers. Now, it's really interesting there that the local investors are actually the strongest right now in terms of the volume of offers that we're seeing. They have got a lot of confidence in the market. They've got equity in their homes. They've never really been in a better position to be able to afford to go out and buy that investment property.
So that means that the influence of the East Coast investor in Armadale has halved in the last 5 years.
Yeah, absolutely.
It's gone from 60 to 30, essentially.
Yeah, so Eastern States investors is 17%, so I'd say it's almost at a quarter.
There you go.
Yeah.
What does that say about the market, though, given it's still growing in Armadale? And the impact from East Coast investors is probably sitting at long-range averages across most suburbs in Perth now for Armadale. What does it mean? Does it mean that Armadale's just hit a new floor, a new confidence level that it will continue to trade at going forward? Does it mean that local investors have a lot of greed and FOMO, and this is where they can see yields themselves, given they've now got equity? I'd like to flesh out with you what that indicates for Armadale going forward.
I think Eastern States investors invested in a suburb that a lot of locals didn't have faith in, and now the proof's in the pudding. The stats are there. People can see the growth that it's had, and they want a piece of the pie. And when you take some of the stigmas out of the area, it really stacks up on paper in terms of investment purposes.
Have the stigmas come out of the area, though? Is Armadale a materially safer, nicer place to be than it was pre-COVID?
I was at an elderly couple's place this morning, and one thing that always surprises me is that the locals, like this couple, they want to buy back into the area. There's a good following of people that this is where they were raised, this is where they've been, and this is where they're comfortable buying back in.
And
So
I guess from the external people who haven't been brought up in Armadale, it's nearly just an affordability thing of this is the only place we can afford. We may have grown up in Canning Vale. We can only afford Armadale, Camillo, Seville Grove, these sort of areas. So we've got to start here. And that has its own effects as well. If you bring some new, fresh people into the area too, and it does, I guess, have a bit of a ripple effect on the socio-demographics.
yeah, and it was always the little town at the end of the railway. It's no longer the little town at the end of the railway.
It's no longer at the end of the railway.
It's no longer, not by a long shot. As the railway continues further south, Armadale's been swallowed by the urban sprawl, and it's still close to the city. It's accessible. It's a gateway to the southwest. It's a tourist destination. There is a lot going for it.
So who's selling now? Why are people calling you and saying, hey, I'm ready to sell? Because arbitrarily, I'm sure you'd be telling your mates, there's still a bit left in this market. So who are those people? Is it just death and divorce?
Death and divorce, they just tick over. That's any suburb. I think there's a large percentage of investors that are moving out of the market. Your typical investor that come from the eastern states made a couple of $100,000 of equity. They're pulling it out. When we speak to them on the phones, they're typically putting that back in to afford a better place of residence for themselves back in Sydney or Melbourne and reducing some of that debt for themselves. That's where a lot of our sales are coming from right now.
Most of them are investors.
Most are investors.
Yeah, interesting. And I guess it makes sense. It's in that cycle of 3 to 4 years of in and out. And given the way prices are going over in Sydney especially, you'd want every one of those dollars to go towards that family home, and it's served its purpose, really.
Our second biggest group of sellers at the moment is your first home buyers that were first home buyers 3 or 4 years ago. They've now got the equity in the homes and they're upgrading with good equity.
They're trading up.
They're trading up.
And where are they going?
Typically still staying in the area. Silver Grove, Mount Rochon, Mount Zero, Byford, Yarra Waters, just getting bigger homes, more modern 4x2s. Some are heading countryway. We also have a percentage of buyers that are getting out completely, going to 2J, going to Albany, and pretty much eliminating debt.
Yeah, I think it's really served its purpose for a lot of people who got in early. And those early entrants have been, as we know, the most rewarded of all investors or home buyers in Western Australia. Hats off to anyone who has bought in Armadale over the last 5 years and gone against the grain of a lot of people's advice of stay away from the urban fringe for many reasons. And I think another one we haven't fleshed out is just the replacement cost value. And when you're buying property for less than it costs to simply build a new house, something's wrong with the value of that property at the time. And so you can capitalize on that if you recognize what's going on with regards to demand and supply. And certainly for a lot of those suburbs in that lower quartile of prices, they've been heavily impacted by the 5% scheme as well. Have you noticed that?
We have 5% scheme. If we broke down last year, I think the first half of last year was a mediocre market and the last half was an insane market, a market we've actually never seen before, even post-COVID. And that was the influx of first home buyers being able to have that ability to get to 850,000. In a story, beginning of last year, we had properties on the market and we were getting multiple offers at 600,000 and they were capped at that as first home buyers. They couldn't go above that. And that's just, you're limited. It doesn't matter that they're happy to pay more. They like the property. They want to secure it. But that was where the scheme was at. Come October, it only took about a month and a half before we had the same thing happen, but at the 850 price point.
Yeah.
I distinctly remember a property where one first home buyer put in 855 just to secure the house, and that cost him about $30,000 more because he was paying LMI and he was off the scheme.
Yeah, geez. That reality itself is probably telling about what government schemes do and the negative effects of them, but also foreshadows maybe what it looks like going forward. Do you think what we're essentially going to see is all of these lower socioeconomic suburbs, lower quartile suburbs capping out in that 850 range as a median, or does it just have to keep growing based on the fundamentals of demand and supply across Perth? What's more of an impact, do you think, in your suburb?
I think what you'll see is it will race to 850 and then it will keep moving at a reasonable pace of knots in terms of it's not being artificially inflated, but we've just fast-tracked from 600 to 850.
Yeah, it seems that advice that people were giving in July, August foreshadowing the commencement of the 5% scheme, that was the best advice you could have taken if you did in the last couple of years, because that has just been such an impact on the market to date. We speak a lot for first home buyers and general investors here, but what about developers, small-time developers especially? Are there opportunities in your suburb still for your house behind a house for a triplex? The zoning works, but are the numbers work?
This is what I probably love about Armadale the most, is the fact that it's got such a diverse range of real estate, and we see that also in the development side of things. We recently put a property from the 50s on 1 acre on the market. Now, this property sold in 21 for $630,000. We just put it under contract for close to $2 million. So you're looking at a dollar increase of $1.4 million, and that's as a percentage growth, that's 217%.
And is that simply based on the multiplied development potential of everything, all of the smaller, medium density properties you could develop on it?
100%. So R1525, it's a 10-unit site, and the numbers really stack up, especially when we've seen land prices move. For a site like that, when you got 10 sales and they're all $400 plus $1,000 each, the feasibility looks really good.
That's mental. Some of these numbers we're talking about today are really hard to believe and fathom. If it wasn't coming out of your mouth, I'd be double checking them on RP data.
You can double check them.
Don't need to. The number one agents told us. What about for the smaller stuff? What about for your 700, 800 square metre blocks? Are you seeing many people doing that at the moment? There's
always great demand, and if you had to pick the most popular property in Armadale, it would be your 700, 750 square metre with a 3x1 house on it, built in the 80s, 90s. That's the most common listing that I have in Armadale at the moment. That property there is high demand for a few factors. We do have the investors, but you've also got the homeowners. So you have homeowners looking at it from a point of view where they can move in and enjoy the space. But then your investors, typically your dad and mum investors, first timers, looking at doing that single retain and build, fairly easy subdivision.
Cutting that.
Costs 50, 60 grand, and there's good margin in it, because the land sales are there and land's gone up significantly that you can really move the land at the end.
Okay, I like that. When we think about the amount of listings you've got at the moment, the amount of people you speak to on a daily basis, I've asked this question of a number of agents and I want to keep interrogating it a bit more. Mobility is probably the biggest restricting factor at the moment. There's so many people who'd love to move around Perth, downsize, upsize, but won't list with an agent because they have no confidence that they could actually do the transition without being homeless. How many properties do you normally run with at the moment as an amount of stock that you're running?
Yeah, right now we've got about 40 that are either under contract from listing to settlement.
All right. So if we think about the fact you've got 40 properties listed at the moment and you're running with that as a manageable amount, but also that would be based on how many people you can convince to list with you right now. How many do you think you could convince to list with you if they all had somewhere to go right now?
I think there's probably the easiest way to run this metric is we average about 30 appraisals a month. We're listing 10 of them, and the other 20 would move, but they're not coming to market because they're too scared because they can't find something. So that's a metric of about 3 times.
Yeah, okay.
Yeah.
And that's interesting. Obviously, Rash Danajal was given a number of about, I believe it was 4 times a few weeks ago. And it just talks to extrapolating that stock on market number of what is around the 2 and a bit thousand properties on the market right now, which is emergency lows, and it has continued to drop from 17,000 6 years ago. To you times that by 3, there's 7,500 properties. We're suddenly a bit less worried about our mobility and people start moving. It just shows that whirlpool effect that reducing stock on market has on keeping stock on market low. It's a double whammy effect that I think is obviously having a double whammy effect on the price growth space now as well.
It's self-gridlocks.
Causes the anxiety that you've brought up.
I think this is a agent problem as well, that agents need to educate and need to work with owners to really get properties on the market and create strategies around helping sellers move and transition in this market. Because if everyone just took a leap of faith and in the next few weeks put their house on the market, would come up to 7,000-8,000 homes on the market, and everyone would be able to transact a whole lot easier. Yeah,
that's our utopia world at the moment. Prices grew in Armadale by 10% last year. They're now at $600,000 pretty much as a median house price. Where does Ash see it being this time next year?
My prediction for the market this year would be 10% growth, about 660 for median price. And I think that will greatly depend on how much more legs the first home buyers have in terms of the scheme. Obviously, a lot of external factors as well on that.
Yeah, of course. There's so many modulators. Interest rate rises, for example, have a bigger impact in places like Armadale than they do in Cottesloe, and there's a good chance we'll see one next week. And therefore, I have two questions for you. If our median house price is 600 grand, what would you be able to buy for 600 grand right now in Armadale?
600 grand would probably get you a 3-bed, 2-bath unit sitting on around 300 square metres, 100 to 130 square metres of internal living, single or double garage, probably built late 90s, early 2000s. That would be a good price for it. There's a lot of them starting to transact closer to 650.
Yeah, I remember when they were 250. So even those would have been good investments back 5 years ago. And if you had an endless amount of money to spend in Armadale, and that might be paradoxical, because if we had an endless amount of money, we might be in Cottesloe or somewhere like that. But let's say that money wasn't an issue. Where would you advise me buying as being the best dress circle street in Armadale, the loveliest place to be?
Any local will tell you go buy in the Golden Triangle. And the Golden Triangle in Armadale is well known to be between the railway and the highway. And it's probably split. If you had to pick a street, Outram Road, it's a long road. There's a lot of offshoots on that. There's a good diverse range of real estate on that road. But there's some really nice pockets tightly held by homeowners. And I was at an appraisal this week there, and the people just love living there. It's close to the Kelmscott shops, to the Armadale shops, you're walking distance to the railway. It's close to the hospital as well. The Armadale Hospital is a really big draw card. We get a lot of buyers buying in to be close to the hospital. That'd be my pick, Trent.
Look, when you look at it on a map, that walk score does look fantastic. You have all the requirements you need to live a nice homely life, if that's where your friends and family live as well. Mate, thanks so much for coming in. It's been a very valuable chat, one that I think a lot of people are going to fall off their chairs when they're hearing some of these numbers, but also one that really talks to a graduation for the suburb as well. As you spoke of, it's no longer the end of the railway line. It's got that same impact now of Joondalup, where it's halfway to the city compared to the suburbs sitting outside of it now. So it certainly is becoming more of a hub, a town centre, a working centre as well, rather than being at the end of the road.
Yeah, it's exciting. If I look back on the last decade, Armadale's come in leaps and bounds, and one can only imagine where we'll be in another 10 years. So thanks, Trent. Thanks for having me. Great podcast. Love listening to it every week, and it's certainly something that we push a lot of our owners and investors to as well, to keep their finger on the pulse in the area, what's happening in the local market. And thanks for having me.
Cheers, man.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!